Welcome back. I'm Pratap here. Today is the 12th May 2024. In this video, let us analyze the NIFTY chart with the help of NeoStock software supply demand zone chain. An announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. You just visit NeoStock channel, and from the home page, you click on this community tab. Once you click, you will get into this space, and in this post you can find a link, the YouTube playlist link. If you click on this link, it will take you to the playlist supply demand zone price action course. Here you have all the training videos in an order. So you just need to scroll down and go to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these videos one by one and strengthen your skills related to supply demand zone price action. We have around 57 training videos are available. Please make use of this opportunity. I have also provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Also, any important updates also I will provide in our Telegram channel. Now let's get into the analysis discussion. This is NIFTY monthly chart, and here you have a monthly demand zone. So this is what we have drawn. Drop base and a rally candle, and this monthly demand zone is having monthly EMA confluence. And also it is having a price over extension, monthly price over extended compared to the monthly demand zone. See, if the overextension has to be completed, NIFTY should reach to this monthly demand zone. But in between, there are many high liquidity zones at the lower time frames. They may not let the NIFTY get into up to this level. So let us analyze that scenario. And this is the weekly supply demand zone chain generated with the help of NeoStock software. And we focus only on the immediate weekly supply zone and weekly demand zone. And the weekly supply zone is created during this week only. And at present, the trend, weekly trend is up. Anyway, monthly trend is also up and weekly trend is also up. But the only point you need to understand, now NIFTY is closed inside weekly demand zone. And this is the second time NIFTY entered into that demand zone. And you need to understand how strong the existing demand in that particular zone. If the demand is not strong, what will happen? There are higher chances that the weekly zone will be violated. So all these things we will analyze. So this is the newly created weekly zone. If you add the hidden body to this candle, this is a drop, two base candles, and again a drop candle. And this is the weekly demand zone. We have a drop, base, and rally. See, this was the first time prices entered into this weekly zone. Let me draw the zone and I will show you. This is the weekly demand zone and this is the weekly supply zone. Earlier prices entered into the zone, they went more deep inside. Prices also very close to the distal line of this particular weekly zone. After that again, institution moved the NIFTY continuously for 2 weeks. And last week again they pushed the prices down. Once again prices entered into this zone, and finally the candle is closed inside weekly demand zone. So that is the reason why this coming week is very critical. There are 3 possibilities. One possibility, with one more follow through candle, they may push the price down and weekly demand zone will be violated. If that is the case, NIFTY will be traveling towards the monthly demand zone. This is possibility 1. Possibility 2, institutions again next week they may create a base candle and the following weeks probably they will push the prices up. That one possibility. Because this is the election season. Maybe until the completion of the elections, probably Nifty might be moving within these two zones. That is one possibility I am saying. And third possibility, without creation of the new zone, maybe institutions may create a lower time frame zones and again push the Nifty up. That is another possibility. But let us see what will happen in this week. But meanwhile, our responsibility is also to identify the trade opportunities, at least for short term. So this is the weekly demand zone. Weekly demand zone is having weekly EMA confluence. And at present, this weekly EMA confluence is not so significant. The reason is currently Nifty is moving here. Not from the supply demand zone violation point of view, but if you look into the pivot high and pivot lows, higher high, higher low, lower high, lower lows, equal high and equal lows, based on that point, this trend is looking like a sideways trend at this point of time. And also we know that weekly price over extension is already completed. There is no overextension. So I am thinking currently Nifty is moving in a sideways as per pivot high and lows based. But zone violation is still supporting uptrend. Supply demand zone violation. And now we move on to the daily time frame. These are the daily zones. And we have a high liquidity supply zone is created, and after that one more daily zone is created. And we don't focus on these pierced zones, but there is a immediately available demand zone. Below we have a high liquidity zone, but this is already pierced, so we don't bother about this high liquidity. So currently focusing on this demand zone. This demand zone is very important, the fifth one. Why it is very important, I will tell you. And currently daily trend is sideways, even here also sideways, uptrend. Weekly trend is uptrend, but daily trend is sideways. Even the pivot high and low also the trend is looking like a sideways only. The higher highs and lower lows, the trend is sideways. Both the trends are supporting sideways. Zone violation as well as pivot high lows. So here, where are these supply zones? We have a rally to base candle and drop. This is the one, rally, base, drop. Again drop, base, drop. Again drop, base, drop. So lot of supply institutions created. And prices entered into the demand zone. Which demand zone? Weekly demand zone. But where is the daily demand zone? And here we have the daily demand zone. Drop, base, rally. So let's draw these zones. Supply zones and demand zones. See the supply zone, the first supply zone. Rally to base candles and drop. This is the daily supply zone. And drop, base, drop. This is a daily high liquidity supply zone. This high liquidity supply zone is having is overlapped with the daily supply zone. This concept is called LOTL, level on the top of the level. Within the same time frame, if two zones are overlapped, that is called LOTL. If it is between different time frames, that is zone confluence. You are already aware of that. This is what we discussed in our training lessons. And again you have one more zone, drop, base, drop, daily supply zone. This daily supply zone is having daily EMA confluence. But anyway, this EMA confluence is not having any significance because the trend is sideways. In sideways, we don't bother about the EMA confluence. It is not having much importance. But remember, this daily demand zone. And this daily demand zone is very powerful, even though it is not high liquidity zone. Why? Because this daily demand zone is the responsible for the creation of this weekly demand zone. Generally, such kind of lower time frame zones which created the higher time frame zone, or which is responsible for the creation of higher time frame zone. That lower time frame zone might be having a lot of institutional order flow. And moreover, this zone is already tested once here and the second one also almost it is tested, came very close, and this is the third time we need to see whether prices again reach into this daily demand zone, again it will move up, or from here it will move up. We have to wait and see. But one point you need to observe, there is a drop candle here and also there is a base candle. What institutions are going to do in tomorrow's trading? There are three possibilities. Tomorrow they may create one more drop candle and a new supply zone might be created. Maybe they will keep an end to here and they may again push the prices and a new daily demand zone will be created from the weekly demand zone if there is a rally candle. And there is also a third possibility. What is the third possibility? Tomorrow once again prices will be moving in a narrow range. They may create one more base candle. That possibility is also there. That's why this week is very interesting. Are they going to create a new zone? If it is a new zone, is it a demand zone or is it a supply zone? That is what we need to understand. And the second point we need to understand, is this weekly demand zone is going to hold the prices or is it going to be violated? If it is violated, weekly trend will be changed to sideways. That is even dangerous. So that's why next week means this coming week. This coming week is very interesting. The tomorrow and the next coming days trading is very, very interesting in Nifty 50. Okay, but this is about the Nifty daily chart. Now let's move on to 75-minute zones. 125-minute zones, I didn't find any significant zones. So directly moving to 75 minutes time frame. Here we have some high liquidity zones are available. We have high priority, high liquidity zone, R_SZ. So let's focus. And the low priority is there at the 8th. This is on 24, first 20. Maybe we may not be going up to this level. And currently Nifty 75 minutes trend is a downtrend. Always remember, trend is your friend. Until the trend changes, you cannot trade against the trend. If it is downtrend, you should be favorable to the short trades rather than going for long trades. When you go for the long trades, once the trend is changed. When trend will be changed? When the immediate 75-minute supply zone is violated, trend will be changed to sideways. After that, one more supply zone violates, it will be changed to uptrend. So look into this 75 minutes chart. Here you have a high liquidity 75-minute zone. This is a fine-tuned zone. This is a fine-tuned zone. Again you have one more drop, base drop. This is a normal demand zone only, as you have seen in that supply demand zone chain in the earlier report. Drop, base drop, but this is a normal zone, but we will draw the zone. And here you have again a rally, base rally. This is a low priority, high liquidity zone. Not only that, this is also a fine-tuned zone inside the daily zone, 75 minutes. And again, this fine-tuned zone is responsible for the creation of this entire weekly zone, because order flow from this fine-tuned area, it picked up. So let us draw these zones. See here the first one. This is a 75 minutes high liquidity supply zone. We have a drop around 4 base candles and again drop. And again here drop, base, drop. This is a fine-tuned 75 minute supply zone inside the daily supply zone. Again here you have a drop, base, drop. This is not a fine-tuned zone, normal zone only. But I will draw. Why we need to draw, I will tell you. There is a reason, strong reason. I will show you in the next slide. But here again you have a 75 minutes demand zone, rally, base, rally. This is a fine-tuned 75 minutes demand zone. This is not the low priority, maybe I have mistaken. This is a normal 75 minutes demand zone, but fine-tuned inside this daily. Why it is important? Because the orders are picked up from this zone and weekly zone is created. That means the 75 minutes demand zone area is the responsible for the creation of this entire weekly. That means in this area there is a strong order flow. That is how we need to understand this situation. Now what I do in the next, I will draw this supply zone, drop base drop. See here, drop base drop. This is not a fine-tuned zone, please remember. This is not part of the daily zone. But why it is important? It is important because the trend is your friend. Currently, the 75 minute zone trend is a downtrend. When it is a downtrend, obviously you should plan for short trades. See here, what happened on Friday? Friday prices entered into the 75 minute zone and it picked up the orders, and see, again prices are down. It would have given you very good trade opportunity if you followed the trend. That is what we learned in our phase 1 and phase 2 training programs. If you forget these fundamentals, obviously you won't get good trade opportunities. Always we should support the trend because the trend is our friend. Once this 75 minute supply zone is violated, then we can go for trend will be changed to sideways. At the time you can plan either sideways based trade setup or counter trend trade setups you can plan. But have you observed one thing? There is a drop, base, drop, and then this supply zone is violated. If that is the case, the sideways trend, the downtrend should be changed to the sideways trend. But why? We are saying currently the trend is a downtrend. Why not sideways trend? This is the question you have to ask. If you did not understand my question, see here. You have a drop, base, drop. After that, this supply zone is violated, and then trend should be changed to sideways trend. Currently the trend is downtrend to sideways. Instead of saying the trend is sideways, I am telling you the trend is downtrend. Even our software also reported the trend is downtrend. Clearly we are seeing a drop base drop which is violated. The reason is I have developed a concept called invalid zones. Probably you people are not aware of that concept. This is a new concept I have developed, and this is an invalid zone. When the zones are invalid, the trend won't be changed even though the zone is violated because it is an invalid zone. It doesn't make any importance. There won't be any order flow. Without the order flow, if the zone is violated, easily it will be violated because it is not a valid zone, invalid zone. How to identify invalid zone? What are the rules and regulations? Completely it is a different topic. When the time comes, I will explain that topic. At present, it is not required for you people. First, you need to learn the most important concepts. This is important, no doubt. But you need a lot of experience before you get into these levels. Lot of means at least you need some sufficient experience. You should be trading and you should at least experience some issues. Then you will be able to understand this concept. So that is the reason why the software did not change the trend as sideways. Invalid zones, the software all understands our software. It is having a lot of intelligence, software is having. That's why trend is still sideways only. If this 75 minute supply zone is violated, then trend will be changed to sideways. Otherwise, once again what happens? New 75 minute zones will be created and again further prices will be going down. That's why this slide is very, very important. At least you come to know there is a concept called invalid zone. What is that concept? Later you will learn. So this is about Nifty 75 minutes. Now let's move on to 25 minutes. In the 25 minutes, identified two high liquidity. This is a high liquidity supply zone and this is a low priority high liquidity zone. But both are important. And currently 25 minutes trend is sideways. And here you have this high liquidity zone, drop, base, drop. This is an important zone. Why I told you, I will explain. And also here you have rally, base, rally here. Rally, base, rally. This is the low priority high liquidity zone. This is also important. Why it is important? After drawing you will understand. See how drawn. 25 minutes, this is a high liquidity supply zone. Apart from that, this is having significance. The reason is this entire daily supply zone is created from this 25 minutes high liquidity supply zone. It picked up the orders and then this zone is created. That means 25 minutes high liquidity supply zone might be having some sufficient order flow, some good order flow. The lower time frame zone is the origin or responsible for the creation of higher time frame zone. This is the strategy we already discussed recently. And recently we are seeing a lot of examples based on this new strategy. It is a new strategy we have identified. Such kind of zones many times they are giving good returns. So that's why it is important, even though it is a high liquidity zone. And what about this 25 minutes low priority high liquidity zone? This is a recently created low priority. Even though the zone was there, recently algorithm identified, not at the creation. At the time of creation, it's a normal zone. Because of the recent trend changes, everything it considered, and this zone is created as a low priority high liquidity zone. And recently it holded the prices here. From here again prices moved up. Why from here? Because here we have a fine-tuned 5-minute zone. That I will show you once we get into 5 minutes time frame. From this fine-tuned 5-minute zone, it picked up the orders and moved up. And again 75-minute zone, because 75-minute zone is a downtrend, because the trend is our friend. Obviously downtrend again push the prices down. That way the short trades from 75, they pushed the prices up to this 25 minutes low priority high liquidity demand zone. This is what happened during Friday's trading session. Probably tomorrow one of these zones has to be violated. Either 25 minutes low priority or 75 minutes supply zone, one has to be violated. It may be on tomorrow's trading session or maybe Tuesday's trading session. If tomorrow, if none of these zones are violated, mostly Nifty will be moving within this range only. Please remember, there won't be much movement except between these 25-minute zone and 75-minute zone. If one of these zones are violated, Nifty will be having a wide range. Okay, now let's move on to 15-minute zones. These are the 15-minute structure. Here we have high liquidity supply zones. 1, 2, 3, 4. But I am not drawing everything. Let me draw the zones from here. 8th. You people can draw these zones in your charts because you have these details. I am selecting from 4th onwards. 4th and 7th I will draw the zones. And probably 12th also I will draw. This is 14 February. Already we are having a 75-minute zone. And this is a fine-tuned zone. Not only fine-tuned, it is a high liquidity zone. Let me draw even this one also. And currently the 15 minutes trend is a downtrend. So please remember, until the trend is changed, you have to go for short trades. Once trend is changed, you can go to the long trades. But those who wants to take a higher risk and want to go for long trades, maybe you can plan your long trades at any high liquidity zones. But remember, playing according to the trend is a good choice. The only thing is the daily and 75 minutes high liquidity zones. The strategy I explained you in lesson 21.3. Hope you all completed lesson 21.3. That concept works. At least 80% level that concept works against the trend during the intraday. But if your zone is a 5-minute zone, high liquidity zone, or 15 minutes high liquidity zone, they may work, but not success rate is definitely not 80%. Maybe it could be 50%, 60%, sometimes 70% level. But remember, 15 minutes trend is downtrend. Give highest priority to short trades until trend changes. Once trend is changes, the long trades also will be enabled. So this is a drop based drop. This is one area we have seen that high liquidity zone in the previous report. This is the another high liquidity. This is a drop, 2 base candles and drop. Again, this is another high liquidity zone. We have a rally, 2 base candles and a drop candle. First, in this, we will draw the supply zones. After that, next, we will draw the demand zone. And we have one more high liquidity zone, rally, 2 base candles and drop. So we have 4 high liquidity zones. We have drawn, this is the 15 minutes high liquidity supply zone. This 15 minutes high liquidity supply zone is a very important. Reason is, this 15 minutes high liquidity supply zone is the reason behind the creation of this entire daily high liquidity supply zone. This is a daily high liquidity supply zone. And it picked up the orders from this 15 minutes high liquidity supply zone, and then daily zone was created. Again, inside this daily, we have another 75 minutes high liquidity zone. Now you need to fine tune this zone with 15 minutes and 5 minute zones. You know how to fine tune these zones. I already explained you in lesson 16. And also every day high liquidity zone analysis, I am explaining you how to fine tune the zones. So please do it. That way you can plan your trade, short trades. Next time prices come to this zone. But here we already discussed this 25 minutes high liquidity is responsible for this. And within this zone again 15 minutes high liquidity supply zone is there. And finally here the most recently created high liquidity supply zone, prices came down, again moved up, picked up the orders, came down up to this 25 minutes high liquidity, low priority high liquidity supply zone. Later again it pushed the prices up. Now let's go to the daily. So here you have daily high liquidity supply zone. See here we have a daily demand zone. Inside daily we fine tuned with 25 minutes demand zone. This daily zone and 25 minutes zone is responsible for creation of weekly zone. After that, that is hidden, that information is hidden here. But here you have again a 15 minutes high liquidity demand zone. So this is the one, 15 minutes high liquidity, drop, 2 base candles, rally. Remember, this daily demand zone is having 75 minutes fine-tuned zone. This 75 minutes again having 15 minutes fine-tuned zone. Definitely, this 15 minutes will be having 5 minute zones. Maybe the 5 minute may not be high liquidity. It could be normal zone also. But if that is the case, this order flow works very well. Now let's move on to the last time frame, 5 minutes. And here we have a high liquidity supply zone and we have a low priority. One more, 9th one is also high liquidity supply zone. 13th is also high liquidity supply zone. And the demand zones we have 19th is there, but this is a low priority, high liquidity demand zones. So let's focus on supply zones now. And also 5 minutes trend is also downtrend. This is the one, drop based drop. This is very important. Why it is important, we will discuss. This is again drop based drop. This is also important. Why? Again we discuss. See, I have drawn both these zones. Drop based drop. This 5 minutes high liquidity zone is important because it is responsible for the creation of 75 minutes supply zone. That's why this 5 minutes high liquidity supply zone is important. The lower time frame zone, which is responsible for the creation of higher time frame zone. Exactly the same way here also. Drop based drop. This is already a high liquidity supply zone. Even then it is more powerful. The reason is this 5 minutes high liquidity supply zone is responsible for the creation of this 15 minutes high liquidity supply zone. So that means this higher time frame zone is created with the help of this lower time frame zone. But anyway, both these lower time frame zones are high liquidity supply zones. probably they may hold the prices very well. But have you seen drop to base candles rally here? And what is this? This is a 25 minutes high liquidity zone, low priority high liquidity zone. Why again drop is created? What is the reason? There is a fine-tuned 5-minute zone. Let me show you here. This is the one. Inside this 25 minutes low priority, we have a 5-minute zone we have drawn here. This 5-minute supply zone, prices came here, drop base rally created. This one, drop base rally, that is created here. Generally when it happened, if this is also a high liquidity, maybe so far software did not identify this as a high liquidity zone. But once same area new zones are getting created, means institutions are adding new order flow here. After some time maybe software will realize it may identify this as a high liquidity. There are different ways our software identifies high liquidity zones. One, it will identify immediately at the zone time creation. Second, after certain price action, it will recognize that as a high liquidity zone. We are predicting, maybe it could be. Because so far software also did not identify this as a high liquidity. Just by seeing this price action, drop, base, rally, exactly from this area. I didn't draw that zone in this slide. Now I have drawn this zone. You are able to see from this candle only, in this candle only, this drop base rally is created. Now I am showing you all these fine-tuned zones from daily chart. Here you have a 5 minutes low priority high liquidity demand zone is there. That is what I shown you in this list. That's why you need to refer this list. From this list I have drawn these zones. This 5 minutes low priority. Again here a 5 minutes high liquidity demand zone here. This zone is created from February, from the month February. I think around February 12, 13, this zone was created. If you look into this picture, see here a lot of supply is here. Here demand is weak, but previously also once we cheated by the institutions exactly the same way. That's why we should be very careful. Previously a lot of supply they created here in this candle. There was a lot of supply in this area. After that, institutions started creating, there was a bull trap. From this bull trap, institutions pushed the market like anything. And all this entire supply in this area completely wiped out. Hope you remember, previously once happened. See the push. You may ask a question, is this going to repeat again? May happen, may not happen, we don't know. But only thing is, whenever there are opportunities we identified, we will plan. Sometimes it may fail, our analysis will fail, sometimes, not every time. Because sometimes it failed, you can't go against our analysis every time. Because we have to trust our analysis. Failure we see once in a while. But many times we see the success. Just because of that one failure happens sometime, you cannot leave your analysis. You cannot take your trades against your analysis. You have to trust your analysis. There are times it will fail. That is what we have to accept. So far the trend, because we are following the trend, so far wherever the short opportunities you have to follow. We have long opportunities here, but remember these long opportunities may fail when we are planning against the trade. But if the risk is very low, definitely we take. In case if the analysis fail, small amount only we will be losing. If it works, we get a good money. That's why these opportunities based on the risk management we will evaluate. But at this point of time, you can see this NIFTY daily chart even more close, so that you will understand where exactly you have order flows are available. 5 minutes level. See, currently here we have a daily demand zone. This is the daily supply zone. definitely prices will be moving between daily demand zone and daily supply zone until one of the zones are violated. So we have around 800 points range is there from this daily supply zone to daily demand zone, proximal line to proximal line. Sorry, not proximal, distal line to distal line, D to D range. See, I have taken the distal line here, demand zone, here distal line of this daily supply zone. So D to D range, we have around 800 points. Between these 800 points level, we will find the trading opportunities. Here we have one trade opportunity, short opportunity. Here, in case if it is violated, again here. And now we have here a long opportunity. Already Friday, the long opportunities are utilized. We don't know. Tomorrow again the same thing will work or it will be violated. If it is a very strong area, definitely you may get one more opportunity. And also, this is the election season. The moment you cannot predict. There could be a short moment, all of a sudden you see a huge volatility changes in the market. That also will be there. There are two possibilities. Maybe Monday may range within this area. At the time, another base candle will be created. That is what we discussed earlier. We have a drop and base. Is it going to be a drop candle, or is it going to be a rally candle, or again is it going to be another base candle? Based on that, you need to understand the market. Suppose tomorrow is also a base candle, new base candle, narrow range. Now market will be moving only within this area. Let us assume tomorrow there is a drop candle. Then this 25 minutes low priority zone will be violated. And prices might be reaching up to here. Or maybe this weekly zone also might be violated. And the below we have a daily demand zone where we have a strong order flow. Maybe from where prices will come up to and it will hold the candle, this drop candle. That possibility is also there. Third possibility. Now prices are in the weekly demand zone. This is the buyer's area. Institutions decide to create a new demand zone. Then what they do? They add a lot of buy order flow tomorrow. If that is the case, market again will go up and all these 5-minute zones, 15-minute zones, small, even though high liquidity, they all will be violated. Maybe they may give you intraday trade, a short period, maybe half an hour or 1 hour, your trade will be completed. Short trade will work. After that again, institutions further push, the zone will be violated. That kind of market also will take place. If that is the case, 15 minutes and 75 minutes demand zones are violated. From downtrend, they will be changed to again sideways trend. That way now you can look for both, apart from short, you can also look for long opportunities also. Always you have to take decisions based on the trend and trend changes also. You need to observe all these trend changes. That's why in all the time frames we are drawing the zones. So this is about NIFTY analysis. Hope this will be helpful to you. Let us all meet again in our next video. Thank you.